What's up, you beautiful people? Welcome back to the podcast. Today, I want to talk about how to manage your finances as a business owner that's doing somewhere between $10,000 a month and $100,000 a month. What should you do both personally with your money, and what should you do within the business to manage it? The reason I'm thinking about this today is because I was working with a private coaching client the other day. He's a young guy. He's like in his mid 20s, and he realized a ton of success really quickly in one of his coaching information products. And then he went and did the dumbest shit you can possibly do with money, which is exactly what you would expect a young kid to do who suddenly has money. Is that he went and bought a Lamborghini. He went and bought like the nicest condo in his city. Like he bought a freaking beautiful watch. Like he spent everything he made. Like it was like a 1-to-1 correlation. So like as soon as he had $250,000 in the bank, he went and bought a $220,000 Lamborghini. And he didn't understand that you pay taxes. Like there's a difference between revenue and profit, right? Revenue is before all of your expenses are pulled out, including taxes, which he didn't budget for. So now he has a Lamborghini and a big tax bill that he doesn't have money to pay, right? So now he's forced into a situation where he has to go make more money. And like, thankfully, he has a good, healthy business and he can do that. Now, if his business hits a hiccup, he's screwed. He's screwed because he like spent all his money. Like at the end of the day, it's not about what you make, it's about what you keep. And like he just blew it all. So he has all these cool toys now. That's great. Cool. Awesome. Like not hating on him. Let's just make sure that we put into place a plan moving forward so we don't continue these stupid behaviors so that we become financially bulletproof. That's the goal. Build a financial fortress. So here's some ideas I want to share with you. Number one is the idea of paying yourself an income equal to the market rate for the job you are currently doing inside the business. This is really important. Like I get the question a lot of like, how much should I pay myself? And so usually what people are doing is they're just paying themselves at the end of each month and they're like, this is how much is left over. So I'll take that. Cool. I recommend that you pay yourself a set income commensurate with what it would take to replace you. So if you're running like the marketing and the operations and you're like the CEO of the company, then maybe you could replace yourself in that role for like $150,000 a year. Maybe you could bring in somebody to run the company for you. And so that's what you should be paying yourself is $150,000. Now you could also then take owner's distributions on top of that at the end of each month from the profits if you want to, but start with that baseline of the income. And the reason for this is because you want to be in a position someday where you can replace yourself in the business. And the only way that you can do that is if you actually have money set aside in the budget for that. Now, if you are looking at your budget each month at your P&L, at your balance sheet and your cash flow statements, and you're looking and you're like, okay, we're making a profit right now of like $50,000. But the reality is like, you're actually not making a profit of $50,000 if you're not paying yourself an income. Because if you were not working for free inside of your business, then the thing wouldn't actually be profitable. If you were to take that money and try and hire somebody to do it, you couldn't do that. So you need to get into that mindset early, is that you're paying yourself an income equal to the market rate. Next is you create a rainy day fund. Most people will recommend that you have somewhere between 3 and 6 months of living expenses set aside, cash in the bank, put it as like a treasury, put it as a high yield savings account, money that you physically cannot lose. Like it's so safe. Like maybe you're even losing some to the rate of inflation, right? Like, but it's money that you know is there. Most people will recommend that you keep 3 to 6 months. I actually recommend you keep 12 months because the amount of mental clutter that accrues inside of your psyche as you're worrying about money, because you're like, I have 3 months worth of runway. Like for me, something magical happened when I realized I could go an entire year without making a single dollar and I'm totally fine. Totally fine. Like there's just something magical that happens at that number that like all the weight of everything just kind of falls away. And like in a very real way, like you've reached a level of financial freedom when you have 1 full year of runway that you just don't have at 3 to 6 months. So start there. What I do with that money then is put it again into a treasury, put it into a high yield savings account. This is not the money that you're trying to earn any kind of return on. So not putting it into index funds. You're not putting this money anywhere you could lose it. You're putting it into as safe as you possibly can. Now, after you've accounted for your rainy day fund, after you've taken your income and you've put aside a portion for taxes, After you've taken a portion aside for your living expenses, whatever is left over from that, I recommend that you just put it into like a 60-40 split of stocks and bonds. And of the stocks, don't buy individual, just go get an index fund because you're not smarter than the market. Everything else should just be poured straight into your business. Just plow it into your business because it's going to be the highest return that you can possibly get from a single dollar. Isn't from going into the market and trying to get 8%. It's from putting it back into your business to hire an assistant who can buy back 20 hours of your time. Now you can take that 20 hours and pour it back into more marketing, more operations, right? And grow the business from 100,000 to 150,000. Like, to get that commensurate amount of return, you would have to have a ton of capital in the market trying to earn for you. Like, you just don't have that at the beginning. So like, we're trying to get you to that point where you have a huge nest egg that you can stock away and have that earn yield for you. But I think a lot of people take for granted like how much money you actually have to have working in the market for you for it to be a meaningful contribution to your living expenses. So in the beginning, don't even worry about it. Just pour it all back into the business. So let's talk about inside the business now. Where do you put the money, right? So first thing is 3 to 6 months reserves. In a business, I don't think you need 12 months. Like, that's actually not the most efficient use of your capital, because here's the reason is that the mindset is a little bit different than your personal expenses. In your business, man, if your idea is like, okay, we have 12 months of runway, that means we can go 12 months without making money. Like, if your business goes 12 months without making money, you should shut it down. Like, before you burn through all the money. Like, it's not working. So you don't need that much. 3 to 6 months so you can cover payroll or any weird months that occur, or like where big bills hit you. You can ride out those rough patches. But like, listen, like, if you're eating through a 6-month rainy day fund inside of your business faster than 6 months, like, you've got bigger problems. So like, 3 to 6 months put aside. Next is taxes. Make sure you're putting money aside for taxes. It's going to be different for your state, different for your location, different for the type of business that you have. So make sure that you're calculating it correctly and you're putting it aside every single month so that doesn't sneak up and bite you in the ass. Next is pour money into hiring, into systems, and into tech. Specifically hiring. As you have more money coming into your business, you should be using that first and foremost to bring people onto the team, and then to increase the quality of the people coming onto the team. So in the beginning, you might only have $5,000 a month. So like, go buy somebody, like, as though they're like a thing you can buy. Go get somebody, bring them onto the team who has $5,000 worth of talent. Now, as you get up to $15,000 of excess, cash flow coming in, now you can go go hire somebody who's got $15,000 a month worth of talent, right? That's the difference between, buying an A player for where you're at in the beginning versus buying an A player, like the true definition of an A player. In the beginning, you don't have enough money to go and get that $1 million CEO, but over time, hopefully you can get there. But in the beginning, you can only get the $100,000 marketing agent, right? So like, start there. Pour everything into that because your team is really the biggest fulcrum that you have here. You want to be really careful, though, that you're not overly investing into tech solutions that just sit on the sidelines. So I recommend doing a daily financial audit. And so the way this works in my businesses is I have my bookkeeper, my accountants in the different businesses. They send me a daily financial memo. And in that, they tell me how much cash is in the bank for that business. What are the receivables that are coming up? What are the payables that are coming up? So I can add a snapshot. I can see how much money we got, what's going out, what's supposed to come in, and then any notes at the bottom for any big transactions that might be occurring. For instance, like, next month is a 3 payroll month. So we want to make sure that we have enough cash in the bank for that, right? Like, always scary when you get caught with your pants down on that one. But what I recommend for you, if you don't have an accountant or a bookkeeper yet, then you should be doing this every single day. Just opening up your bank accounts, looking at your actual accounting, and just doing an audit and saying, okay, and writing down if necessary, physically writing it down and saying, okay, here's what I'm expecting to come in for my payables. Here's what's going out in my receivables, right? Like, writing it down ingrains the numbers, and you need to know your numbers. It's not acceptable for you just to put your head in the sand and hope it all kind of works out. Take ownership of it, look at the numbers every single day, and you're going to be really well served. Now, a resource that I recommend if you're just starting off, or even if you're doing $100,000 a year or beyond, is a website called carry.com. Now, I was an early investor in this. I've now since divested from this, so I have no personal interest, but it's a great product. What they do is they have bookkeeping services, and they have the ability to help you with your tax management. because at the end of the day, the tax bill is going to be the biggest bill that you pay. It's the biggest bill any of us pays over the course of our life is first the ignorance tax, the cost of not knowing how to make money. That's the big one. The second one is the tax that we pay to our government. So anything that we can do to reduce our taxable liability is massive. Carry.com helps you with that. This is not sponsored by them, by the way, either. I'm just shouting them out because it's a great product. They can help you set up a solo 401k. Highly recommend that you go and look into that, especially if you're in that 10 to 100k range where you probably don't have a big team, if any hires or anybody on your team at all, right? You might be working just through vendors and 1099s. You can set up a solo 401k, which gives you the ability to put like $75,000 aside, tax-free or tax-deferred rather. That's very, very incredibly powerful. Highly recommend that. And then they have a bookkeeping service inside of there. Very cheap. I think it's like $200 a month. You don't need crazy fancy bookkeeping in the beginning, but you do need to have a finger on the pulse of your P&L, of your balance sheet, of your cash flow statement. If you don't know what any of that means, then go to YouTube, type in what's a P&L, what's a balance sheet, what's a cash flow statement, and start learning. I'm telling you, accounting is the language of business. You need to speak it. So that is very high level. How to manage your finances for business owners doing between 10K and 100K a month. This is not financial advice, by the way. So, take it for what it's worth. I'm not your financial advisor, but these are just some of the things that have worked for me and I've seen work for others and hopefully will work for you. Let me know what you took away from this down in the comments below, and I will see you in the next video.